Hey everyone, for this week's Rockstar Minute, I just wanted to touch on something. I think we're going to be a little bit more than a minute, maybe two, but I'll try to keep it short. Last week we were talking about interest rates and interest rates driving real estate prices and everything, and some people commented, well, you know, nothing goes up forever and what's happening with real estate, and they're absolutely right. Nothing goes up forever. There's fluctuations in the real estate market. So when we buy our pretty little properties, you know, let's say that is the property. You don't want to buy that property. It's very poorly built. You can see it's almost going to fall over. But anyways, so when we buy those, here's what we're buying for. Let's pretend we bought this and the price of this property is down here when we bought it. Now through inflation, that's a lot of what brings real estate prices up and prices of everything is inflation. That's a whole other story which we can get into another time. But real estate prices will fluctuate. Now right now they've been going up pretty steadily in a lot of areas, but they will come down. There's been big drops. Some people commented like, guys, hey, what about early 90s? I lived through that. Our family lived through that too. We learned a ton of lessons from there. But over time, because of inflation, things will generally go up and down, and they trend upwards, right? But let's say it doesn't matter where things are on this you know, this value. I've really messed this up. Let's see if we can fix this. All right. Okay. Okay, let's get a little bit better here. So, let's just say, you know, there's a little bit more market fluctuations here and it kind of ends up going this way. Now, here's what rents do historically in just vast amounts of market areas, especially in Ontario with rent controls, okay? Rent controls especially. All sorts of areas where real estate prices in the past were hit by 60%, rents budged by 5 to 10%. Tons of examples here. So in Ontario with rent controls, typically rents just do this. They just keep edging upwards, okay? So now when we buy properties as investors, we're investing for cash flow. And this is the reason why, multiple reasons why. One is so banks will continue to lend to us, we can grow a portfolio, a group of assets, we're creating a group of income producing assets. But look, when the property value goes up, that's what we want. Ideally, we're happier when the property value goes up, right? So when the property value goes up here, great, we have additional equity in the property. If the property value drops to here, are we happy? No, we're not exactly thrilled by it. We would prefer that it goes up. But how much does it really matter to us when we're investing for cash flow? If we can generate cash flow when we buy the property here, we know that we're going to be generating cash flow no matter where the underlying asset value goes. So we're investing for the cash flow, for the income that it produces. And I can tell you something else. If the market ends up dropping this much, like an extreme case, and the market drops like that, we're going to be very happy that we have additional income producing assets, right? Because that's what we'll be looking for. My phone's going off, I gotta shut it off there. So then when the market recovers, and you know, maybe it'll take, you know, 2 years, 10 years, 20 years, but eventually because of inflation, hard asset values come back. Look at history, these are all historic lessons, right? We come back here, we get the equity back in the property. But throughout this whole time, when this has been happening, we're generating positive cash flow, income producing assets. Someone else is paying off the asset for us and is producing income for us. That's the difference. That's why it's so important to invest in real estate, focusing on the proper numbers. Because if you're just in it for potential appreciation, thinking you're going to buy something at 500, it's going to go up to 700, you can sell it, then it gets extremely riskier and it's something you got to watch out for. So I think we're way over a minute, but that's what we wanted to talk about. This is the big picture of investing. This is how successful investors invest, not just in real estate, in any asset class. Look at Warren Buffett, the way he invests in stocks. Self-liquidating asset, invest for either dividends or controlling interest in the company that pays him cash flow that he can take and reinvest in other companies. This is the successful model across the board people have been using for years, decades, and beyond. We're just applying the same principles to real estate, and it doesn't matter what the market does, as long as we're focusing on the right numbers, we're creating a safety net for ourselves. All right, that's what we're looking for. Until next time, your life, your terms.